Are you an investor looking for premium market opportunities? Presenting premium and exclusive service for investors by Kalkine.
Good afternoon, welcome to the Crypto Buzz by Kalkine TV. This is Sage. The Fed's Barr has signalled stiffer oversight for cryptocurrency after what could possibly be a contagion from the FTX downfall. Michael Barr, the Federal Reserve's top regulatory official, signalled on Monday that stiffer oversight of cryptocurrency is in the offing after the collapse last week of crypto exchange FTX that sent shockwaves through the industry. Crypto asset-related activity requires effective oversight that includes safeguards to ensure that crypto companies are subject to similar regulatory safeguards as other financial services providers, Barr said in written testimony released Monday ahead of an appearance at the Senate Banking Committee Tuesday. His first before Congress since assuming the role of Fed Vice Chair for supervision. We do not want to stifle innovation, but when regulation is lax or behind the curve, it can facilitate risk-taking in a race to the bottom that puts consumers, businesses and the economy in danger and discredits new products and services with consumers and investors, he was quoted saying. And after the major crypto exchange FTX filed for US bankruptcy protection on Friday 11th November, the crypto industry is bracing for further fallout. Some of FTX's investors have said they are writing their investments down to zero. Other crypto firms may be exposed to FTX by having held tokens on the exchange or by owing FTX's native token FTT, which plunged around 94% last week. While the extent of the contagion across crypto markets remains unclear, here are some firms who have given information about their exposure to FTX so far. Binance Chief Executive Changpeng Zhao sparked concerns among investors on November 6th when he said in a tweet that Binance would sell its holdings of FTT. And Zhao told a Twitter Spaces event on Monday that Binance had previously held $580 million worth of FTT, of which we only sold quite a small portion. We still hold a large bag, he was quoted saying. On to BlockFi. The embattled cryptocurrency lender BlockFi said it had a significant exposure to FTX and that withdrawals from its platform continue to be paused. They were quoted saying, "We do have significant exposure to FTX and associated corporate entitles that encompasses obligations owed to us by Alameda assets held at FTX.com and undrawn amounts from our credit line with FTX.US. BlockFi was quoted saying. In July, FTX had signed a deal with the troubled crypto lender to provide it with a $400 million revolving credit facility with an option to buy it for up to $240 million. Looking at Celsius Network, bankrupt crypto lender Celsius Network said in a tweet on November 11th that it had 3.5 million Serum tokens on FTX, as well as around $13 million in loans to FTX-linked trading company Alameda Research, and the loans were under-collateralized, mostly by FTT tokens, Celsius said. Coinbase Global Inc. said in a blog post on November 8th that it had $15 million worth of deposits on FTX. It said it had no exposure to FTT, no exposure to Alameda Research and no loans to FTX. It said it had $5 billion in cash and cash equivalents at the end of the third quarter. CoinShares, a crypto asset manager, has $30.3 million worth of exposure to crypto exchange FTX, and CoinShares said in a statement on November 10th that CoinShares CEO Jean-Marie Mognetti says the group's financial health remains strong, adding that its net asset value at the end of the third quarter was £240.6 million in US dollars. That's $282.51 million. So Crypto.com, the Singapore-based crypto exchange, Crypto.com said on the 14th of November that it had moved about $1 billion of FTX over the course of the year, but most of it was recovered, and exposure at the time of FTX's collapse was less than $10 million. The CEO, Chris Marszalek, said the firm would prove all naysayers wrong on the platform being in trouble in that it has a robust balance sheet and took no risks. Galaxy Digital, crypto financial services company, says its third quarter earnings statement on November 9th, the day after FTX froze withdrawals, that it had $76.8 million worth of exposure to FTX, of which $47.5 million was in the withdrawal process. And in the earnings call, Novogratz said Galaxy had more than $1 billion in cash and $1.5 billion in liquidity. Galois Capital, the hedge fund Galois Capital, had half its assets trapped on FTX. Co-founder Kevin Zhao told investors in a recent letter, the Financial Times reported, estimating the amount to be around $100 million. And Galois did not respond to Reuters' comment requests sent via email and its website. Genesis, a US cryptocurrency broker, Genesis Trading's derivatives business has approximately $175 million in locked funds on FTX. The company said in a tweet on November 10th, they were quoted saying Genesis has no material exposure to FTT or any other tokens issued by the centralised exchanges. And that was on a tweet on November the 9th. And taking a look at Kraken, the cryptocurrency exchange Kraken said on November 10th that it did hold about 9,000 FTT tokens on the FTX exchange and was not affected in any way or any material way. Kraken also said on Sunday it had frozen the accounts of FTX, Alameda Research and their executives. So hopefully this won't be too much of a contagion into the crypto sector, as many crypto businesses are being looked into by the regulators for similar sort of proceedings that were found happening at FTX. And many crypto founders are actually headed to Twitter to assure their users that this was bad business practice and not the fault of Web3 or crypto that has caused the downfall of FTX. What are your thoughts on that? Please do comment below. Do you think cryptocurrency, Web3 and blockchain have a life after this? Quite a tumultuous year 2022's been for the industry or sector. Please let us know. All right, well, thank you for watching this edition of Crypto Buzz. Keep watching Kalkine TV for more market insights and business news. This is Sage for Kalkine Media.